And welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we'll connect with our experts. But before that, let's have a look at what the markets are up to. So Cheryl, once again, we are drifting in the red, and it's the Bajaj twins that are making most of the pressure in Nifty 50.
Absolutely. A very good morning to you, Shrishti. And looks like we'll have to wait for some more time till we could scale that record high levels for the benchmark indices. As you can see today, Nifty is sub 18,700 mark as well. It's more actually seen some sort of a recovery from the day's lowest point. Nevertheless, there is weakness definitely creeping into the benchmarks, and also Nifty Bank, that one is trading with cuts of about 0.5% as we speak. It's the broader markets that are trying to show some sort of a resilience in today's trading session. Both mid-cap and the small-cap index holding on in the positive territory as we speak. In fact, it recovered from the day's lowest point as well. If you look at the advance decline ratio right now, it is neck to neck. But remember, when we started for trade, it was in the favor of the advances. But now, as you can see, it has weakened a tad bit. And right now, as you can see on your screen, neck to neck coming in for the advance decline ratio. Let's talk about the list of gainers. Then you have the insurance pack that is still leading from the front. So you have HDFC Life, SBI Life among the top gainers on the Nifty index as we speak, followed by two metal players, JSW Steel as well as Hindalco. Add to the list, even Power Grid is gaining in trade today. And like Shrishti mentioned, is the Bajaj twins that's putting pressure. At least that's the one that's leading the losses on the Nifty as of now. So Bajaj Finserv is down 2%, Bajaj Finance is down 2%, you have HUL that's down 1%, also M&M and Ultratech as well, they are down about 1% as we speak. Let's take a deeper look at what the sectoral indices are doing at this point in time. You have the metal index, that is the top sectoral performer in today. It is up about 1%, followed by realty index, and IT also is holding on some sort of a shade of a green in trade today. But on the flip side, it is the banks under pressure, FMCG as well as the media index. So that's the way how the markets are looking like at this point in time. But a lot of individual stocks to talk about, Shrishti. One, definitely HDFC AMC. You had Aberdeen that's gone ahead and sold their stake via block deal. You had Timken also block deal take place, and Ather has launched this QIP. But apart from that, there's that big player that is in focus, and that is Indigo.
Well, yes, absolutely. And that particular stock is seen to be flying high at its records level. And today, onto the Buy Now, Sell Now lens, we're going to be focusing on that. It is the largest ever order in the history of the Airbus, wherein Indigo has placed a record-breaking order with Airbus at the Paris Air Show. Now, the airline ordered up 500 Airbus A320 family aircraft, making it the biggest order in the history. And remember that last week, Indigo top spoke exclusively on ET Now on the speculations of the mega order. Let's go in to my colleague Somit to understand what this deal means for Indigo and the aviation industry. Somit, over to you.
The 500 crore aircraft order that Indigo has given with Airbus is the single largest aircraft purchase that we have seen so far in the aviation history. Now, the deliveries of this aircraft are expected to come in by the end of this decade, that is 2030 till 2025. Now, the exact mix of A320 and A321 and the engine selection are yet to be done. Usually, A320 is used for short haul routes, while A321 is used for long haul routes. Now, the potential price for this order at list or the MRP, as I would easily put out, would be around 50 billion US dollars, but there would be a lot of discounts coming in given the large deal size. The actual price for Indigo could be around 25 billion US dollars. Now, post this big order of 500 aircraft, the outstanding aircraft order for Indigo now stands at close to 977. This is followed by Air India at around 470. They had recently given this order to Boeing and Airbus both. Then there is SpiceJet at 129. Go First, which we still do not know whether they would take this order or not, but the order stands at around 89. Then there is Akasa Air at 52 and Vistara at 13. Now, why this such large order given by Indigo? Now, in the past 20 years, we have continuously seen that the aircraft supplies have been, there have been delays in aircraft supplies, and hence to secure orders or to secure aircraft post 2030, they have given this large order. Now, they aim to increase the international market share over the next 2 years. They are expecting to increase the international capacity to around 30% from 23% currently, and they also saying that the Indian domestic market would grow at around 15% growth, thus to suffice the domestic growth and their international expansion plan, the company has given such large order. Now, Indigo Airlines is the 7th largest airline globally given by the departure terms, and their dominance in the Indian aviation industry has been continuously rising. By the end of May, their market share had increased to around 61%. This increase in market share was also because of the Go First shutdown that we had seen in the month of May.
All right, thank you so much for that, Soumit, for putting all of that into context. Remember, it's a big order coming in from Indigo. And also, if you had seen the market share data for the month of May as well, it was Indigo hands down ruling the skies. But let's check if Indigo will continue to rule the charts. No doubt today it is near its record high levels. It's actually cooled off from those elevated levels. But let's bring on board our experts. We have today Kunal Shah joining us. We will also have Rajesh Agarwal join us shortly. But Kunal, very good morning to you and welcome aboard. Buy now, sell now. Let's talk about Indigo. You had Soumit who put into context what's working for Indigo and what's the latest deal also with Airbus like. But on the charts, do you think that this high rise of Indigo will continue from here on?
Good morning. I think definitely if you look on a chart perspective, Indigo looks very attractive. Specifically, we have seen on a fundamental perspective what are the roles for the entire aviation industry that will play out. And even one more thing, what I would to add on the fundamental perspective is that next year we are going for elections, and before that we always see some relief by the government on the oil prices as well. So definitely this is going to be a good fundamental base for Indigo. Plus on the technical charts, we have seen a very strong breakout from a big sideways pattern, where you can see Indigo was facing a clear-cut resistance at 2200, and post that 2200 resistance was taken out, we have seen a continuous rally on the upside toward 2500 levels. So I think momentum has already started to build up. Whatever declines, even if you get in the stock, it could be an ideal opportunity to add on to your position. That 2200, which was acting as a resistance, now becomes the support for the stock. So as long as Indigo stays above 2200, the view remains bullish. The momentum indicator, which is the RSI, has also given a positive crossover, which confirms the strength of the momentum. And I expect targets of at least 3000 on the upside in the next 3 to 4 months. So I think on any dip, it's a buy for me, Indigo. A very good chart setup with volumes where we have got momentum buying, as well as the trend looks very positive in the short to near term perspective.
So the trend is positive and the advice is to continue riding this particular trend. Kunal expects at least 3000 coming in for Indigo in the next 3 to 4 months. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, we'll start taking all your stock related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on the top of your screen to mention your name, the stock that you're looking to invest in, and if you have already invested, mention the buy price, the quantity, as well as the time horizon. That will help our experts help you better. Also, a caveat, if you are trying to reach us on the number that is flashing on the top of your screen, that is via a phone call, we will not be able to answer that. So please restrict it to only WhatsApp messages. But for now, let's bring on board our experts for today. Today we have Kunal Shah as well as Rajesh Agarwal joining us on the show. Very good morning once again, Kunal, to you, and very good morning to you, Rajesh. Looks like it is heavy traffic today in Kolkata, isn't it?
Good morning, Cheryl. It's just because of that Rath Puja today, the ISKCON thing. Almost all roads are closed, and that ISKCON temple is very nearby to our office, and that's why particularly this area is quite, I can't explain how it is. Like, it's totally chaos, I would say.
So which means that one should look at the aviation space then. Indigo, we didn't get your view on that. What's your take on Indigo then?
See, Indigo looks very good. There has been a quite uptake on for quite some time in the entire aviation space. I would say revenge travel across the world is taking place. Crowded airports, long queues at check-in, crude at $72, better cash accruals, and not to forget the sky high fares. Only last week I had to book a ticket for somebody from New Delhi to Bhubaneswar and it cost 38,000. So that's the kind of ticket prices it's there. And the cherry on the cake is like Go Air filing for bankruptcy and a market share of almost 6.9% of Go Air going back to Indigo or SpiceJet. And I believe that Indigo would be a biggest beneficiary because of its reach. 300 aircrafts already. They have 480 aircrafts, the pending order, and 500 aircrafts new order. By 2030, they might be a very big giant, I would say. But at this point of time, buying Indigo would be a little risky bet because it has quite run up quite a lot, almost 50-60% from its 52-week lows. So I would say wait for some time, some correction to happen, that one can go long.
Okay, so we are getting a bit of a divergent views from both of our experts. While Kunal is positive on Indigo in the short to medium term, expecting a target of rupees 3,000 in the next 3 to 6 months. But on the contrary, Rajesh is also positive on Indigo, but do suggest that after the recent run up in Indigo, what you can do is have a strategy. You can buy this counter but on decline. So that's the outlook coming in on Indigo, which is flying high in today's trading session. But with this, viewers, let's kickstart taking all your stock related queries onto the show, and taking up the first query. And Rajesh, coming to you for this one. This question is from Hamsa, and she's a long-term investor and has invested in Tata Steel with 870 shares in quantity at an average price of 107. Wants to know what is the outlook on the same, and can she add more at current market price?
We are bullish on steel as a pack, and Tata Steel being the leader, obviously it's going to gain much more than others or the second and third run counters. One, the demand is crawling back, raw material prices have gone down, coke prices have settled. And not to forget the government's focus on infrastructure and real estate, and 2024 we have elections there. So steel as a pack, steel and cement both are going to do well. Tata Steel would be our first choice, Jindal Steel being the next one. I think one can add on declines to this stock for a medium-term target of maybe 125, 130 odd rupees.
All right, let's move on and let's talk about Polyplex then, and this one is coming in from Nageshwar, writing to us from Hyderabad. He's holding Polyplex at a price of 1375 rupees per share. He wants to know from here on what should his strategy be for the short to medium term, because given the fact that the earnings were also bad, any chance of improvement in the fundamentals in view of easing operating input costs? So the fact that he's asking a fundamental view, Rajesh, what's your take on Polyplex?
In the last 2-3 quarters have been bad because of various other reasons. And not only this company, the entire polyfilms industry was in a bad shape. But going forward, we think it's going to do well. The numbers have been good. The balance sheet is strong. They gave dividends every quarter. And not only domestic, but even international operations are doing well. I think one can add Polyplex at this point of time if one's funds allow. Maybe a target of 1,500 odd rupees in the next 6 months is quite possible.
Okay, that's the take on Polyplex. Moving on, and Kunal, coming to you for next one. The question is from Bhardwaj, and he wants your take on two FMCG counters. Firstly is Marico, 475 shares at an average price of 520 rupees, and he also has he also wants your advice on Dabur. Can he make a fresh entry into Dabur on the buy side? What's your outlook on both of these counters? He's a long-term investor.
So I think firstly, if I talk about the FMCG as a space, FMCG has been a very big outperformer if you look on a long-term chart perspective as well. So I think FMCG will continue to outperform going forward as well. We had seen the interest rate hike scenario, the inflation scenario, due to which FMCG as a sector was not participating. Now we have seen, at least in the last 1 month or so, FMCG coming back with strength. So firstly, talking about Marico, the stock recently had witnessed a very strong breakout on the technical charts with a gap up opening, and post that it has been sustaining on the higher levels. Now on the lower end, 510, 520 is a very strong demand zone. Whenever the stock has hit those marks, it has again seen some buying interest over there. So clear cut, if you are holding long positions, you could keep your stop loss of 510, which is the demand zone, on the downside. And if you want to add fresh positions in Marico, utilize declines to again around that support zone of 520, 525 to add your long positions over here. Because the chart setup looks extremely good. Probably for fresh entry, a buy on dip approach would be much more advisable. But already holding long positions, keep a stop loss of 510. I expect overall going forward the stock to at least achieve the targets of 590 to 610 on the upside over here. So still from the current levels, you could get a good upside of 10 to 15% in the near term. Talking about Dabur, whether to take a entry or no from the current levels. I think Dabur as a stock has also been a massive underperformer in the recent times. We saw the stock correcting almost from the levels of 600 to the level of 500. So you can say a 15% correction what we had got in the stock. Recently, the stock had given us a good momentum breakout over here. It has been sustaining above its 200 weekly moving average, which is placed at 548. So as long as 548 is sustained on the lower end, I expect the momentum to continue towards the higher end, towards that 595, 600 zone on the upside, which is the resistance zone as well. So if you are holding long positions, definitely continue to hold it. And if you want to add new positions at the current levels, I would recommend, yes, definitely you can add it at the current levels. Keep a stop loss of 548, which is the 200 DMA for it. And on the higher end, we can expect targets of 590 to 600 on the upside.
This one is coming from Rakesh. He's writing to us from Delhi. And Rajesh, IDBI Bank, he wants to know whether it's a good buy. If yes, what price and how long should he continue to hold on to this one? IDBI Bank, we all know that there is a big, huge news flow that we are all awaiting to hear on, and that is the divestment of IDBI Bank. What is your take on this one? Do you think right now is a good buy for IDBI Bank, and also for how long should one hold?
See, it's a good buy only on divestment hopes. Otherwise, on valuation parameters, I think all the positives, the numbers and all which have come in the recent past has already been discounted in the price. But once something of that sort, any announcement of the divestment comes, it may touch 62, 63 odd rupees. But nobody knows when that happens. It may happen in 6 months or may take 2 years down the line. So it's very difficult to predict on the time horizon of that. But yes, any announcement on that front would be a major trigger for the stock. At this point of time, all the positives have been discounted in the price except for the divestment thing. So if somebody is ready to hold for that long period of time, by long period I mean indecisively, you never know when that will happen. So that one can buy. Otherwise, one can buy at around 50, 48, 50 odd levels.
Okay, moving on, and Kunal, coming to you for next one. The question is from Raja, and he's holding 1,000 shares of Karur Vaishya Bank from a price of 105 rupees. This particular counter has seen a great run up in the recent past. So at this point, is that a hold or sell for the medium term outlook? And given the choppiness in the markets, what's your advice coming in on this banking name?
So I think if I look at the long-term charts of Karur Vaishya Bank, I think it's definitely a very big hold. On the long-term chart, the stock had recently given us a breakout from a flag pattern, which is a bullish reversal pattern for us. So clear-cut, a strong momentum is already built up in the stock. I expect the stock on the higher end to go towards the levels of 135, 137. We have seen a spectacular rally from the levels of 100 to 120. So almost the stock has seen a 20% rally in the last 1 to 2 weeks or so. But still the momentum is left. I think continue to hold on your position. It could go higher towards the levels of 135 on the upside.
All right, so that's the take coming in on Karur Vaishya Bank. Let's move on and let's take this one from CG. He's writing to us from Karnataka. And Kunal, I'll take this query to you. He has Kirloskis Ferris at a price of 495 rupees per share. He wants to know whether what should he do with this counter and what sort of a target can he look at this one over the short term?
I think definitely again one should keep on holding Kirloskar Ferris. In the last of 4 days, we have seen some very strong buying from the lower levels. The stock has been trading in a strong uptrend with high low formations, which are intact on all the time frames. You rarely get such kind of starts where you see such kind of strong momentum. These are some of the stocks which you should keep on holding. I think even for a short-term perspective, we can expect at least target of 520 to 525 on the upside. So the base has been formed. The rally is still left. We have seen a spectacular move, but still there is upside which is left in the stock.
Okay, Rajesh, the next question is from Rakesh from Delhi, and he wants your advice on AGI Greenback. He's holding 1,000 shares at a price of 305. What to do at this point in time for this particular counter? What's the outlook going ahead?
See, we are very bullish on the stock from a very long period of time, and the stock has already proved to be a multi-bagger 2-3 times from lower levels. But still going forward with the kind of product profile, the glass manufacturing and all, I think this stock can be give you good returns in the near future, maybe in the next 6 to 9 months, 20-25% upside from current market price is quite possible. So one can hold to this stock and add on dips.
Okay, next one is coming in from Gavaskar. He's writing to us from J. Gavaskar. He's writing to us from Tamil Nadu. He wants to know whether it's time to enter Apollo hospitals and also what's your view coming in on Dixon Tech, Rajesh?
One can add, despite the fact that it has run up quite a lot with 10,000 beds in 40 presence in 40 cities. It's one of the largest player in the sector, I would say. They are planning for a huge expansion or are planning to add good number of beds in the near future. Even the pharmacy division is doing well. The only problem is the digital presence, which again the management has said that they would take care of. I think it's a very good stock to be into. One can add to that. Dixon Tech, it's quite, I think, expensive at this point of time due to all the news of outsourcing and on. One can add around 4,200 odd levels.
Okay, the next question is coming from Subha Ratha Jatra and Kunal. He wants your advice on Piramal Enterprise. Does it merit an investment now? How the technical charts looking like for this one and any entry levels for the same?
Definitely, if I look at the chart of Piramal, again, Piramal was one such stock which I've seen a massive correction from the higher levels. And post that correction, the stock went to an oversold territory. And post that oversold territory, we have seen some good rally in the last 1 month or so. So definitely this momentum is likely to continue. You can add positions even at the current levels. The stock immediate resistance is its 200 EMA, from where we have always witnessed a correction in the stock. And that 200 EMA is placed around the levels of 840. So 803 is currently where it is trading. One can keep a stop loss on the downside somewhere around 785. And one can look for targets of 840, which is the 200 EMA, where it faces the next resistance.
All right, as we know that Mumbai, city of Mumbai is definitely not witnessing any monsoon, any showers, any rainfall whatsoever. But we have Murli who's writing to us from Palakkad and who's actually shared a very beautiful picture with me of Kerala backwaters. Thank you so much for that, Murli. Definitely feeling very refreshed right now. But Murli has 100 shares of Ahluwalia contracts purchased at 550 rupees per share. He wants to know whether he should hold or sell. He's a medium-term investor. Kunal?
So if I talk about the stock Ahluwalia, I think definitely the stock has witnessed some good momentum in the near time. But since I can see the stock is overstretched, the rally has been very sharp. I think this is a good time to at least book profits if you are holding on to long positions.
Okay, but with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries, so stay tuned. Welcome back. You're watching Buy Now Sell Now, a show where we get you answers for all your stock-related queries. And continuing the same, the next question is on a banking name, and Kunal, taking it up from you. The question is from Dhananjay, and he wants your advice on SBI Bank. He's saying, is that a good time to add SBI Bank for a swing trade for the next 1 to 2 months?
See, I think if I talk about for a 1 to 2 month perspective, I think it's still a wait. The 200 support, EMA support for the SBI stands at around 555. So still a 10-point correction from the current levels could give you an ideal buy opportunity. So if it comes around the level of 35, that is where you can add on to your long positions. Keep a stop loss of 540 on the downside. You can hold it for a swing trade for at least 1 to 2 months for a target of 590 to 600.
All right, moving on then, and this one is coming in from Ravi Tega. He's writing to us from Hyderabad, and he wants to know about Jindal JSPL 125 shares at an average price of 520 rupees per share, as well as BOB 350 shares at a price of 169 rupees per share. Wants to know short-term targets for both of them. Kunal?
See, I think firstly talking about the metal as a space is looking very, very attractive. We have seen in the last 1 month or so, China has cut down the rates almost 3 times. Now, this is a very big positive fundamental trigger for the Indian metal sector. So the demand for the metals will again come back, and that is where you will see the metal stocks again outperforming the broader markets. So metal as a sector is looking very attractive for a very short-term perspective. I expect Jindal Steel specifically talking about trading near its 52-week high, which is clearly showing its strength over here. We can see the levels of 620 to 650 on the upside from the current levels as well. So I can say 10% rally is easily possible. So Jindal Steel, one should definitely add on to your current levels from the portfolio as well, and as well as for trading. The lower end support for the stock is at 540, 550 zone, which has been a very strong base for the stock on the lower end. So Jindal Steel is definitely looking very attractive. So coming back to that PSU banks where Bank of Baroda was given as a query, I think PSU banks as a sector is looking extremely good for me. And I think with Bank Nifty looking weak, I think PSU banks, when Bank Nifty settles down, it will be the PSU banks which will outperform the Bank Nifty index. So on that, Bank of Baroda continues to be a strong pick. If he is holding from the lower levels, continue to hold. I am expecting targets of 215 to 230 on the upside.
Okay, moving on to the next query. And Rajesh, this question is from Elvin Pinto from Mumbai, and he wants to know about DMart. He would like to add this counter for a long term, maybe for a period of 5 years. At this point, is this a good time to add this particular counter?
See, the company has been doing very well. Margins are okayish, I would say, but the valuations are stretched. In the retail sector, we have better choices and highly undervalued. I would say there are a number of stocks, maybe Reliance Retail, which is inside Reliance Industry. One can go long on Reliance Industry with a time horizon of 1 to 2 years. That would give better returns. Or Spencer's or ABFRL are better bets than Avenue Supermart at this point of time. Maybe a correction of 10% from the current market price for Avenue Supermart, that's DMart, would be a better level to enter.
Okay, this next query that I have is coming in from Vidya, writing to us from Chennai, holding Indian at an average price of 427 rupees per share. She's sitting on a very healthy set of profits right now, so she wants to know whether she should book profits or continue to hold on to it. What's your take on this one? Kunal, 427 was a buy price. The stock is around 450 rupees per share. Do you think that she should book profits or stay put?
Can you please repeat the stock name? I missed that.
India Nippon is the stock price, is the stock name.
Okay, so India Nippon as a stock, what you can see that if I look at the chart for India Nippon, we had again seen a good kind of rally from the near-term perspective. I think I would suggest this is an ideal opportunity level to at least book some profits over here. If the buy price is lower from the current market price, continue to hold on. We will see some buying momentum coming in, but that would be an ideal opportunity to exit the stock.
Okay, Rajesh, for the next question, it's a bit of a long list shared by Ayush. What he's saying that he has 5 counters in his portfolio, that is Rallis India, Rain Industries, Sterlite Technologies, CESE and Jubilant Ingrevia. Out of these 5 counters, what he is currently facing is minor losses, but he's holding these names for the past 1 year. What to do in these names, which ones to hold for mid to long term and which ones to exit?
See, I think all of them are good counters. Rallis being belonging to the Tata Group into agrochemicals as good. CESE is trading at a huge discount to its peer groups. It's trading at a PE of 10, 11. That's a good buy price, I would say, for a target of 90 odd rupees in the medium term. Rain industry, calcined carbonate coke is doing well. Recently, it has started performing maybe a 7-8% upside from current market price is quite possible. Jubilant Ingreva corrected quite a lot from his highs, and the company has started giving turnaround. Maybe a 520 odd levels would be a better level to exit. The only problem I witnessed is Sterlite Technologies, where I think the valuation have already been come at an optimum level. One can exit from this counter.
Now, this one is coming from Rima, and this one is on IRCTC. She's saying her buy price for IRCTC was 742 rupees per share. She wants to know what should she go ahead and add some more of this particular counter in her portfolio, given the fact that it has crossed the 200 DMA recently.
I think definitely she should add even from the current levels where probably she could average her position. Now, on the technical chart perspective, RCTC has given us a breakout from an inverted head and shoulder pattern, which is again a strong bullish reversal pattern. The lower end base is at 640. So 640 is a very strong support over here. So she should definitely average at the current levels and probably she will get an exit above the average price.
Okay, moving on to the next question. And Kunal, coming to you for this one. The question is from Subramaniam from Chennai, and he's holding 300 shares of NHPC at a price of 32 rupees. This particular counter is moving up. It's also a 1% in today's trading session, and Subramaniam is sitting at a decent profits in this one. What to do next? What sort of targets are you looking out for this one?
I think the stock has given us a spectacular rally in the recent times. I think still more momentum is left. We can expect the stock to go towards the levels of 49.50 on the upside over here. So I think that 49.50 zone should be an ideal opportunity to exit. Currently, it is trading at 46. So even if you look at on a percentage perspective, it is still a 6-7% kind of a move which is left. So he can continue to hold on, and around that zone of 49.50, he can book profits.
Okay, this one is coming from Raghu. He's writing to us from Chennai. He's holding Aavas Financiers with a 30% loss, Rajesh, and he's willing to hold for the next 1 year or also look to average at current market prices. Buy price is 2023 for Aavas Financiers. He wants to know what should he do because fundamentally he's a bit concerned with the fact that the founders exit as well.
See, I think he is rightly concerned with the founders exit, even the numbers were not that comfortable. It's better to buy some other housing finance companies, maybe LIC Housing Finance, which is trading at a very attractive valuation, or Canfin Homes would be a better bet than Aavas Financer. I would say, why not switch from Aavas to any of these two?
Okay, moving on, and Rajesh, the next question is from Pradeep, and he wants medium to long-term view on 3 counters. Firstly, it's Indigo. We did discuss about the same. So skipping this one, the 2 counters are Grasim and RBL Bank. Can any of these names can be bought at current market price, and what sort of a target are you looking out for these?
See, Grasim can be a long-term bet. It's a holding company of Ultratech. They are moving into paints. VSF business is doing well. I think even their holdings in AB Capital has gained value in the recent past. I think a target of 1850, 1900 odd rupees is quite possible in the next 3 to 6 months. As far as RBL Bank is concerned, the numbers have been pretty bad in the last few quarters. Only the last quarter, there was some kind of solace. I think maximum one can hold for a target of 190. But this should be a trading bet, not a long-term bet, I would say. For long-term, you have better private sector banks such as Kotak or IndusInd.
Okay, this one is coming from Poonam Anand and she wants to know about Federal Bank. Kunal, she has 200 shares and an average price of 126 rupees per share. She wants to know whether she should look to average right now.
Definitely not at the current levels to average. The stock is trading near its support of 120, 121. But if this support gets decisively, we can see further correction in the stock towards that levels of 110, 105 on the downside. So I think it's a wait and watch. Continue to hold on the positions which she is holding. If you get a bounce and a support from the current levels, probably she will get a good exit.
Kunal, the next question is from Madhuri and she wants a technical view on RailTel as well as Praj Industries. She didn't share her buy price but wants to know, do you see any upside in the short term for any of these counters?
I think firstly, the railway as a sector has been outperforming and we have seen some spectacular moves over there. Specifically talking about RailTel, in the last 10 days, the stock has witnessed some good buying momentum. 115 was a very strong support for the stock. From those onwards, we have seen a good rally on the upside. Now, again, the momentum to continue on the higher end. Currently, stock is trading at 127. It has to surpass 130, 131 on a closing basis. Once that is taken out, then probably fresh entries could be taken over there, and we can see targets of 140, 145 on the upside. So it's still a wait and watch. Above 130, it could be a very good buy for a targets of 140 on the higher end. So retail is something which, as a sector and even as a stock, which one should continue to hold on, but not at the current levels to add fresh new position.
All right, so that's the take coming in on RailTel and some details of HDFC AMC block deal also on the bottom of your screen where Aberdeen has said that they've sold HDFC AMC shares at an average price of 1,873 and they have no more shareholding in HDFC AMC. But on that note, we slip into a break on this edition of Buy Now Sell Now. Stay tuned, more on the other side, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. And this one is a very interesting one. Rajesh has come from Mohammed. He's writing to us from Mangalore and he wants your view on NMDC Steel, a counter that has been actually been in news on the back of its likely the divestment plan that is happening. We all know that there have been reports where you have officials from the divestment department saying that once the plant is commissioned, that's when they'll move ahead with the divestment plan for NMDC Steel. But what's your take on NMDC Steel? If someone is already holding on to this particular counter, because I believe, yes, Mohammed is saying he's received the shares from the split. So what's your take on this one? What should he do with it? Stay put with it or look at other horizon?
Continue to hold. You said it right. Once the plant is operational, it's going to be divested. Government holds 60.49% and they intend to sell around 50.49% of share, retaining 10%. At the current market price, the government holding to be divested would be around 6,500 odd crores. Considering the government's divestment targets, I believe they are going to see that the process is done in a very swift manner. But I think even on valuation parameter, it's trading at a very low valuation. One can expect a target of 60 odd rupees in the next 1 year. So one can continue to hold the stock. And if it falls to maybe 38, 40 odd levels for any reason, one can even add.
Okay, once again, coming to you, Rajesh, the next query is from Mani from Chennai, and he wants a fundamental view on CDSL as well as CAMS. What he's spotting is that these counters are showing weakness for the past so many months now. So at this point in time, can he enter in these particular counter? What's your outlook going ahead?
Actually, CDSL can be entered at this point of time. Valuation have become quite comfortable after the kind of correction which we have witnessed. One of the largest DP, I would say, and the only listed player because NSDL is not listed, and this has got a advantage of being listed. So one can enter into this. As far as CAMS is concerned, I think being a largest RTA, it has its own inherent strength, but adding at this point of time would be a little dicey. I would say 2,000, 1,900 odd levels would be a better levels to enter.
All right, this next one is coming in from Ashish. He's writing to us from Delhi, and Kunal, he wants to know about Rajratan Global Wires. I'm unsure if you tracked this one. His buy price is 368 rupees per share, and the other one is FACT, that is Fertilizer and Chemical Travancore. He has purchased that one at a price of 375 rupees per share. He wants to know what should his strategy be in both of these counters right now.
Yeah, I think firstly talking about Rajratan, I'm sorry, I don't track this counter, so I don't have a much view on the stock. The second stock, what is spotted out is FACT. I think fertilizer as a space has been doing quite well in the last 1 to 2 months. Specifically, if I talk about FACT, it has been a big outperformer in the entire fertilizer pack only. So the stock has witnessed a very strong momentum, but I think at the current levels, it's not a very attractive buy to me. If you are holding from lower levels, at least start booking your profits where it is trading around 420, 421 rupees currently. For fresh entry, one needs to wait for any correction to have an ideal opportunity for buy.
Moving on, and with this, let's kickstart taking all your queries in the rapid fire session. And Rajesh, the first question is from Subra from Chennai, and he's holding shares of Spandana Spurti from a price of 668 rupees. This particular counter is showing weakness, but he's still at mild profit. So is that a hold or sell?
One can book profit at this level.
Okay, this is from Nambiar from Kerala. Wants to know about Piram Pharma, buy price 83, and Bandhan Bank buy price 288 for the next 6 months. What should the strategy be, Kunal? Kunal? I believe his line is disconnected. Rajesh, what's your take on Piramal Pharma and Bandhan? What should she do?
Book profit in both.
Okay, Rajesh, Girish is holding 15,000 shares of Manappuram Finance at a price of 129. Wants to know any chance that this stock hits 135 in the short term. What's your advice on this?
Short term, I don't think there would be any fireworks in this stock because of reasons like banks giving a very tough completions to Manappuram. So I think one can have a longer time horizon and hold.
Okay, this one is coming in from Krish about JB Chemicals, 1,790 rupees per share. Is it a good stock to hold for the next 3 years, Rajesh?
Yes, of course, it's a good stock to hold. The Russian business has been divested and the business are doing well.
Okay, Karthik Raja, Kunal, this question is from you. Karthik Raja is holding one lot of HDFC Bank at a price of 1,665 rupees and sitting at a loss. So, is that a hold or exit at this point?
I think definitely you should keep on holding it. Keep a stop loss on the downside somewhere around 1580. If 1580 is taken out, then it could exit his long position because I am expecting a rally from the current.
Okay, this one is on Wockhardt Pharma. Suresh from Bangalore has 3,000 shares at a price of 480 rupees per share. Makes sense to continue to hold on to it or look to exit? What's your take on this one, Kunal?
See, pharma as a sector has seen some good buy.
All right, I think we've lost his line there. In a short word, Rajesh, Wockhardt Pharma, makes sense to stay put with this one?
Yes, it's a hold.
All right, and with that, we come to the end of the Rapid Fire as well as Query segment. Thank you so much, Kunal, as well as Rajesh, for joining us on the show, giving us your take on Indigo, as well as resolving all of our viewer queries. And viewers, with that, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching. Stay tuned. Markets at noon coming up next.